book to be covered today is by Dawie Roodt, along with Lynette Retief, entitled Tax, Lies and Red Tape, Confessions of an Unreconstructed Neoliberal Fundamentalist. In this book, Dawie gives his views of the problematique in South Africa and the economy, and also provides some solutions, sometimes rather controversial, revolving around things such as state spending, taxes, the role of monetary policy, the role of trade, competition, and of course he says something about our labour market. Right, you know the name of the book, Tax, Lies and Red Tape, with the subtitle, Confessions of an Unreconstructed Neoliberal Fundamentalist. It's all about his contempt, his almost disdain, his frustration about the recurring theme of state intervention as, in his own words, an apparent panacea, solution for all the country's problems. The subtitle, Confessions of an Unreconstructed Neoliberal Fundamentalist, he says he gets that idea from an accusation leveled at him by Jeremy Cronin, who called him some time ago exactly that, an unreconstructed neoliberal fundamentalist. Although actually, apparently, he called him an hysterical, unreconstructed neoliberal fundamentalist. Now, the rest of the book is all about, essentially, the following chapters. He embarks upon a brief description, a very quick one, history of the world in a few pages. He moves on to the problem with communism, a few thoughts on the Great Recession, and then I think these are some of Dawie's favorite topics, state spending and taxes, so quite some time spent on those. A brief interlude regarding central banks and monetary policy, again a very important topic in his opinion, the importance, the benefits of trade, and then not surprisingly, why is labour not working? Please note the double entendre there, and then ending off with a few thoughts on what next, what does the future hold? His interpretation of communism is that the main goals are no social classes, no money, and no state. So a classless society, a moneyless society, and a stateless society. He's going back to the very roots of communism, I suppose Marxism really, and saying those are the fundamental goals. But the real problem he has is that in practice, these goals are not met, have never been met. Communists try very hard to anticipate the needs of the economy and allocate resources accordingly. But not because he's a communist, but what human being, asked Dawie, has this ability to foresee the future? Not surprisingly, given the context of our times, he does devote a chapter to the so-called Great Recession. And like everybody, he has his own theories as to what the root cause was. He suggests that when we try to understand the Great Recession, there are three basic sets of reasons. The one set is based on emotional arguments, a warping of values, too much greed, buy, take your pick. Other people point out there are technical reasons for that. Banks did not have sufficient capital reserves, assets were incorrectly priced, risks were incorrectly assessed, and then we have what he calls fundamental considerations. When we think back, it's easy to be wise after the event, in the lead up to the recession, we could point out that interest rates were too low. Other measures all ended up encouraging the accumulation of both private and public debt. And this accumulation got bigger and bigger, the bubble got bigger and bigger, and sooner or later it was going to burst. He believes that the last one was the real reason for the Great Recession. He now gets to, I would imagine, what he enjoyed writing most, because this is what he enjoys writing about, and that is state spending, and the other side of the equation, state revenue. He starts off by asking the question, in a perfect world, what should governments do and what should they not do? And he takes the cue here by talking about the well-known notion of collective goods. Then there are essentially three core functions: defense, law and order, and an independent judiciary. And if he had his own way, that would be the end of his list. He's willing to accept that in the right kind of context, one could perhaps also justify a state spending money on various kinds of infrastructure. The secondary functions, the ones that he believes governments should not be heavily involved in that fiscal year, accounted for 60% of total government state spending. Education, the biggest single one, healthcare, social development, and housing. Add them all up, gives you 60% of total state spending. The core functions, his preference, between them made up only 1/4 of state spending. The problem is that the recipients of these benefits are not the major contributors to the state. They're not the biggest taxpayers, but they are in the majority. So, if humans and human beings are smart, those who are in the majority will continue to vote for a bigger tax burden on the minority. He now introduces into the debate what's become known as the trio of concerns in this country. Unemployment. The real problem, he says, in unemployment is barriers to entry. That's the real problem. That's what's creating and causing unemployment. Poverty. He says the problem isn't that we've got too many poor people. The problem is we've got too few rich people. And then inequality. The real problem is a perception problem. Because inequality allows the rich to save. Savings are crucial to finance investment. Investment in capital goods, in machinery, in equipment, in roads, in infrastructure. And we need that for future growth. And the second point he makes here is that in a system of unequal distribution, entrepreneurship, hard work, and good skills are rewarded. And that could and should serve an incentive for others to emulate the so-called rich and become wealthy. We have a redistributive society, more and more voters demanding a redistribution, and therefore, by implication, demanding a redistribution of the tax burden. But the tax base is constrained. It can't get much bigger. There are limits to how much you can tax. You don't really necessarily want to borrow too much money, but the upshot is you might end up as a government borrowing too much money. And therefore, Dawie expresses growing concern about our budget deficits and rising state debt. He reckons one idea to consider is to create a fiscal council. And by that he means a group of independent experts with a small technical support team to supplement the one that already exists in the National Treasury. So this policy, this committee, this fiscal council, if it discovers from its deliberations that we're heading for a budget deficit, raise the VAT rate. Ensure that a fiscal surplus is achieved at all times. Of course, the flip side of state spending is indeed tax revenue. And he starts off, again fairly conventionally, by asking what would represent an ideal, good tax system? A sense of fairness, cost effectiveness, must be simple and easy to understand, and must enable the state to collect sufficient revenue, must be neutral, it must aim to diminish the individual tax burden by spreading the tax load. He points out that out of an estimated population of 51 million South Africans, only 5.3 million are registered personal income taxpayers. In other words, every individual taxpayer supports 9 people who don't pay tax. So, there's a very clear imperative to do something about all of this. Simplify everything. Reduce the number of personal income tax brackets. He says there are far too many. Let small and large companies pay the same income tax, but preferably a much lower rate, and if he had his own way, based on turnover, not on profit. Increase VAT. Abolish tax on dividends and capital gains tax. Implement more user charges. He does devote a chapter, which I'm going to summarize in one slide, to central banks and monetary policy. His own conclusion, actually, of his own chapter, is this has been a crash course on money and monetary policy. So he goes through things such as the role of central banks, the autonomy of central banks, how money is created, inflation, the link with inflation and exchange rates, trade. In brackets, trade and tribulations. Why do we trade? Let's start off with basics. We trade because we want to obtain things that we would otherwise not have been able to get our hands on. That's pretty obvious. Where does competition fit into all of this? And here he has again a few controversial things to say. For instance, consumer welfare is a coincidence. Consumer welfare is the unintended and coincidental byproduct, result if you like, of competition. His argument is you cannot command an economy to be competitive. Companies don't compete to give consumers a better deal. We're not that altruistic or philanthropic. He even goes on to say that collusion can work to the benefit of consumers, depending on the circumstances. If greed means that we use resources optimally to maximize profits, to maximize output, then by all means, let's call ourselves greedy. The second last chapter is all about labor, with, as I said, the very provocative title, Why is Labor Not Working? Entrepreneurs don't employ people because they want to do so. They employ people if they have no choice. So jobs don't have to be created. Jobs happen. He then says also, he's got a problem with the accusation that labor or workers are exploited in South Africa. Who is being exploited? Small business owners. Employers, he says, are the ones being exploited. They're being exploited by the greedy taxman, aggressive workforce, and regressive legislation. The state as an employer, huge problem for Dawie. If we just take a look at central and provincial governments, they account for around about 10% of total employment. If you add to that state-owned enterprises, statutory institutions, as 21% of the total workforce is employed by government or semi-government. The state should employ as few people as possible and improve productivity or cut wages to levels more or less comparable with the private sector. His last chapter, what does the future hold? He spends most of this chapter pointing out that countries in the past that have been successful for all kinds of reasons, not least of which the ability to enjoy and exploit a demographic dividend. That situation where not more than 30% of your population is younger than 15, and not more than 15% is older than 65. So around about 55% are economically active, or potentially economically active. The question is, can we expect that? Can we generate one? And are we ready for it? Now, some calculations that we've done show that South Africa's demographic dividend, in terms of age structure, started about 4 years ago, around about 2010. And we should expect to be in that kind of age composition for another 40-odd years. Are we ready for it? I would suggest not. So does Dawie, by the way. And he ends off then, not really reflecting on the future of South Africa, but a far more generic story. He quotes an author by the name of Daniel Stelter. This is a checklist that countries need to deal with now. Deal with the debt overhang immediately. Reduce unfunded liabilities, future government or state commitments, if you like. Increase government efficiency. Prepare for labor scarcity. Develop smart immigration policies. Invest in education. Reinvest in the asset base. In other words, modernize infrastructure. Increase private sector investment. Increase raw material efficiency. The old story of beneficiating, adding value. Cooperate on a global basis, and then remove the next conservative cycle. Essentially, the conservative cycle is when you have very strong volatility in business activity. Years and years of economic upswing, followed by years and years of sharp economic downswing. Clearly, as Dawie says, I concede, these steps are not easy. They're the first tentative steps in a long, arduous journey. There is still time to act, provided leaders from all walks of life, government, business, organized labor, etc., take firm and swift action to secure future economic prosperity, social cohesion, and political stability. Thank you.